So that was just a sampling of the financial flux that we are seeing take place. And I am really happy to be here with all of you at our inaugural What's Next Summit. I have the great pleasure of welcoming and introducing Lynn Martin, the president of the New York Stock Exchange. Welcome.
Thank you.
Yeah. So for those of you who are joining today, thank you again for being here. For those of you who are tuning in on our live stream, make sure to follow the conversation. The hashtag is What's Next Summit. And Lynn and I were talking about this full circle moment for me at this stage, because the last time I was in front or near as many people as I'm seeing now was on the floor of the stock exchange, where I spent nearly 4 years. You must be sort of used to this by now, but I wanted to start there because a lot of people, I think, still ask me, what are the traders doing on the floor still? I mean, everything is electronic. You know, we know about these systems. So I would love to just begin with the role that the stock exchange still plays, but also more importantly, the people who are still there.
Yep. Thanks for having me today, Hope. It's lovely to be here today, and I'm thrilled to see so many people in person as well. It's like a homecoming seeing all these humans in person. You know, the role of exchanges is to provide a framework for buyers to meet sellers. Sounds like a really simple objective, but there's a lot of complexity that goes into it. And our job is to ensure that during periods particularly of increased volatility, like we've seen over the last couple of months, that buyers meet sellers in an orderly and efficient and transparent way. So that's really what we pride ourselves on. Now, back to your question about the role of the floor brokers. The floor brokers are really unique to the NYSE's market model, and their role is to ensure that those companies that are part of the NYSE community, those issuers who have selected NYSE as their listing venue, to ensure that their stocks trade in an orderly, transparent fashion. And if I look back, because I'm a data girl and I'm a numbers girl at heart, if I look back over the last couple of months, those companies that have been listed on the New York Stock Exchange, the issuers have seen 2 times less volatility at the open and 2 times less volatility at the close. So the role of the traders, the role of the designated market makers are doing what they set out to do in their mission.
And the New York Stock Exchange is a symbol, I think, for a lot of people. A symbol of the capital markets, a symbol of New York. I remember when the stock exchange decided that they had to close 2 years ago. That was a really big deal. I think for a lot of people, that really brought it home that this pandemic was a serious thing. What have you learned about what the stock exchange really symbolizes in those past 2 years?
Yeah, I mean, our job is to remain open. It was very important to us to balance safety and security of those employees that were on the floor alongside of our mission of providing fair, transparent, and orderly markets. And most importantly, it was important to us to remain open in an electronic fashion to allow buyers to meet sellers, particularly during those really volatile periods we saw in March, April, and May of 2020. You know, that's been our mission. We've stayed true to that mission. We continue to stay true to that mission.
And when you've seen the changes that have now fallen on your plate as you've just come in, the geopolitical tensions have rocked the markets. We know that there were some investors who were looking at the signs coming into 2022, started to sell off. So we're looking at this year starting off in a very different way than the way that 2021 ended. How are those geopolitical tensions playing out in your day-to-day world?
Yeah, there's been a lot of volatility in the markets. I think I'm probably stating the obvious for those either watching us today or that are in the audience. We've seen tremendous volatility, and the one thing that I don't think I had expected, but was very grateful to my predecessors, Stacey Cunningham and Tom Farley, for investing in is the technology. So when I look back over the last 3 months, this past quarter, we have seen peak messaging rates. We've seen our top 5 messaging days across our platforms of almost 500 billion messages processed across our platforms each day, multiple times over the last 3 months, which is a bit baffling when you think about the amount of information that is coming through our pipes. Obviously, that volatility has been good for trading volumes, liquidity in markets. The markets have operated as they can and they should in a very transparent fashion. The systems have held up. But what it's meant is the IPO markets have been a bit quieter than we had seen, particularly in 2021. Now, that's not something that's foreign to us. When you think about, past periods of volatility in markets, particularly 2019, we came into that year where the government shut down, a lot of tensions in DC. In 2020, obviously, we just talked about how 2020 started off with a global pandemic. So the IPO markets do get quiet when there are periods of volatility. And that's very much what we saw. But the demand is there. The amount of firms we are pitching at the moment, the amount of firms that are queued up to come to market as soon as volatility comes down is significant. So there's still a significant amount of companies that are looking to access the public markets to fund their operations, to develop capital, to raise capital, to invest further in their businesses. So the signs are there that we are going to have a rebound when the volatility starts to abate, which I'm hopeful is soon.
So companies you think are sitting on the sidelines right now trying to wait for the right time?
Yeah, a big indicator that most public company CEOs or companies about to become public CEOs that I talk to are looking at the VIX index, the volatility index. It's a great measure of volatility in the markets. It does feel like the VIX calmed down to that 20 and below barometer, which is key for a company that's looking to come to market, right around the time that the Fed did what they said they were going to do, which was raise interest rates by 1/4 basis point. That did seem to calm the market down. And I think there's been a realization that this Russia-Ukraine tension may be here for a bit of time. So markets have clearly are starting to bake that potential reality into the way they're trading.
I want to go back to listings in a little bit, but on top of all of our minds is this crisis right now in Ukraine. Larry Fink of BlackRock recently wrote in his letter that he believes the era of globalization that we've seen over the past 30 years is coming to an end. Do you agree with him?
I don't know that I would say that I agree or disagree. It's certainly awful what is happening in the Ukraine. It's caused us all to pause and think about, the way we transact our operations, and we can only operate on the basis of the information that we have in front of us. For example, when sanctions got imposed, we decided to halt the Russian issuers who had stocks listed on NYSE, and as that week progressed and we saw what some of the index-based funds were doing, we wound up halting the ETFs that were also issued on NYSE. So I'm going to be the eternal optimist, though, and halts mean that the stocks are closed, and I'm hopeful that the world can get back to a global economy.
Well, as both leaders of the capital markets in your own right, both Larry Fink and yourself, the other thing that he mentioned in his letter was around the idea that being able to access the capital markets is a privilege and not a right. Do you agree with that?
I think our capital markets in the U.S. are the greatest in the world. We are the envy of the world, and we provide access to investors with the greatest amount of investor protection. That's been a system that has been developed, honed, and tweaked throughout multiple crises, throughout multiple wars, throughout pandemics, whatever the case may be. So I say that we continue to be the shining star and the symbol that the rest of the world should strive to be in terms of capital raising.
And I also bring it up because I think what he's implying also in this is that companies have a choice of where they want to do business. And what role do you think the stock exchange, for example, plays? What role do you think you play in choosing maybe the companies that you also want to work with? Have you ever looked at a company and said, this is not a company we want listed on the stock exchange?
Well, we have a variety of stringent listing standards, and we welcome all companies to the extent that they meet our listing standards. We have a different threshold than other exchanges in terms of the amount of capital that a company would need to have on their balance sheet and different governance standards in order to be listed on the stock exchange. And that's why, when we look at our companies, they're the entrepreneurs, they're the innovators, they are the envy of the global economy. And when you think about some of the more emerging risks that investors are worried about, such as environmental, social, and governance, which I'm sure you've heard today, you look at the NYSE community and we continue to lead the way through example of how our companies think about those types of factors, those types of disclosures, diversity on boards, things of that nature.
The world's largest stock market. I mean, you do serve as a role model, I think, for the rest of the world. Going back to deals, so I think based on EY, IPO activity in the Americas region was only about 37 in this first quarter. That's a decline of 72% compared to just the year ago period. SPACs were a huge part of last year's activity. I think it was like 600 SPACs came to market out of 1,000, which was a benchmark. You're seeing a lot of skepticism, nervousness around SPACs. What's your outlook for this year?
So, I mean, SPACs are an interesting way that companies can come to market. They represent yet another innovation in the market: SPACs, direct listings, traditional IPOs, and we think all of those avenues are good to allow more and more companies to come to market. That said, the SEC just came out with additional potential regulation around SPACs, and I think that balances investor access as well as investor protection. So it makes sense that a newer mechanism for companies to come to market may have additional regulation placed on it.
Do you think that SPACs deserve more scrutiny?
I think that anything that adds transparency to markets, and anytime you can add transparency on a variety of factors, I think that's a good thing for public markets.
You are a data girl. You have background in statistics. You know that data is the underlying driver of all of the businesses that are on your exchange, that are the crux of really companies today. What have been some of the biggest changes that the New York Stock Exchange has made to improve the data efficiency on your networks?
Yeah, I mean, continued investment in the underlying systems to handle the throughput of the messages that I talked about. One thing we very much saw during the pandemic was firms gearing up on their disaster recovery sites and enabling their systems to be fully functional from home, so ensuring that we had the right level of access available. But then also, through some of our affiliates, we're focused on adding transparency to a variety of opaque markets. For example, the business that I ran prior to stepping into this role was our fixed income and data services business. And that business provides real-time valuations on 2.8 million securities, fixed income securities, around the globe on a real-time basis. That's a very opaque asset class. It's very different than the stock market. The muni markets, for example, are incredibly different. So we've always been more of the philosophy that more information adds more transparency, and more transparency makes for a better liquidity in a market. And that's been our focus on the investment side, and will continue to be our focus on the investment side.
A lot of Wall Street banks are getting into crypto, whether it's trying to open up direct access through funds or creating their own exchanges. There were some patent filings that recent reports have uncovered with the New York Stock Exchange. Will the New York Stock Exchange become an exchange for crypto?
Yeah, I mean, it's not something that's planned at the moment. We had filed for patent protection around NFTs and the metaverse and crypto, mainly because we wanted to get smarter about it. If you look back, we actually made an early stage investment in Coinbase in 2015. We invested about $10 million in Coinbase. We exited that stake at the end of last year, and the reason why we made that investment was to get smarter about the space. It led to some other innovations that we did within our holding company, including a company called Bakkt, which attempted to make the crypto transfer reliable and secure. And that's a business we just recently spun off into a SPAC combination. But we've also made a variety of investments alongside in this vein. A company called T0 we just recently made an investment in, and that's very similar. We wanted to get smarter about just the whole idea of digitization and what that's going to look like to further add efficiency and transparency to, say, a little bit more less efficient or a little less efficient areas of the ecosystem.
Today's all about what's next. Is it pretty much inevitable that the stock exchange will have crypto on its exchange or adding some services to accommodate the interest in this space right now?
Yeah, I don't know. It's an area that we continue to look at with interest. We're continuing to look at what the regulation around the crypto markets will be. That's an area that is still a bit open, I would say, and it's still something that I know the SEC, from my talks with them, is still thinking about as to whether it's a security, whether it's a currency, whether it's a commodity. So I would say it's something that we continue to monitor closely.
And for those of you who read Axios newsletters, my thought bubble would be that it would rather probably be inevitable, but we'll check in with you in a couple of years. One of the things that has come up recently, in the past year is a threat of sorts that your predecessor made, warning that the stock exchange may leave New York if new tax on stock trades were implemented. Is that threat still a viable one?
It's not something we're currently contemplating at the moment.
And the other thing about the New York Stock Exchange in terms of the history is that it's one of the oldest exchanges in the world, and there are lots of exchanges popping up everywhere, whether it's crypto, whether it's used clothing. I mean, everything is a marketplace these days. For anyone who's looking at our conversation today and seeing how you build your marketplace, what would you tell them is the best thing to do in building a marketplace the right way for the long-term future?
I think the right way to do it is to disclose the rules associated with the marketplace and be very transparent about the rules associated with the marketplace. It makes for a better experience for everyone to know exactly what the rules of the environment that they're operating in. It's why, when you mentioned crypto, I think the one thing that is inevitable there is there will be additional regulation around that market. I think there's going to be additional regulation around a lot of markets, and that just comes back to the participants need to know what the rules are in order to add the highest level of transparency and liquidity to whatever the asset class is.
One of the other big changes over the past year has been the influx of retail investors, whether it's the meme stocks or you're seeing a lot of retail trading apps now proliferate and become very, very popular. How has that changed your business?
I think it's great that there are the new class of retail investors in the market. It shows the confidence in the markets. It shows the fact that the investors, the moms and pops, do actually believe in the long-term future of the stock exchange and of lit exchanges. So I'm very excited about this new class of traders. They're a different breed of trader, though, so it's something that, from our perspective, we're focused on providing them as many tools to help them make informed decisions as possible. As you said, and as I said, I'm a data girl, so at the end of the day, if I can provide tools and services to someone to help them make a much more informed decision about risk management, that's always going to be something that's at the forefront of my mind.
It's funny that you used the word, breed or class, because one of the things that sort of came up for a lot of the retail traders was they felt like they were being treated like they were somehow lesser than the institutional. They felt like they were being condescended to for certain networks and reports. And I wonder if you feel that there is a different way that companies treat retail investors than they might institutional investors, or an attitude that maybe you think needs to change.
I think because retail has emerged through the pandemic and it's been here to stay, it's something that has lasted through the 2 years. It's not a fleeting trend, and I do feel as though those concerns that have been expressed by the retail investor have very much been heard. I know, for example, some of the wealth platforms are very focused on attracting the retail investor, providing them with the type of research, maybe a little lower touch research than the institutional investor is used to, but providing them with some research so that it enables them to make a much more informed decision.
All right, last question before we get to our one fun thing. What is the biggest threat to capitalism right now?
I would say a big threat to capitalism is probably the challenges that we see geopolitically. I am concerned that this will have knock-on effects from a policy perspective in terms of allowing companies to come to the U.S., raise money in the U.S., and at the end of the day, that is a good thing for the investing public. It's a good thing for global investors. It's a good thing for U.S. investors. I would hate to see any sort of bifurcation that occurs as a result of the geopolitical environment.
And just to bring it back full circle to our first topic, which is the pandemic, what was one habit that you picked up that you didn't expect you would ever pick up?
Yeah, so I am a big fitness fan. I'm a very big boutique fitness fan, so I was a big fan of going into the studios, and the one thing I never thought I was going to pick up was the online fitness craze. So I, like many other people, bought a Peloton and used it actively, still do use it actively, but not just for cycling. The one thing that I found surprising that I used it more for was, meditation and yoga and the ancillary courses.
All right, and just like that, that's our time. Lynn Martin, thank you. Such a pleasure and honor to be with you today. Thank you.